The boat market is shifting in ways most owners didn't see coming. New boat prices actually dropped 3.4% in the first half of 2024, while overall boat sales fell by 9% compared to the previous year. If you're thinking about buying, the market dynamics have changed significantly. But if you already own a boat, especially one purchased in 2021 or 2022, you need to understand what's happening right now because the math on your investment has shifted. This isn't a simple crash story. The financing is tighter, inventory patterns are changing, and the buyers who flooded marinas during the pandemic have stepped back. So the real question is, what does this actually mean for buyers and sellers right now? Let's start with how we got here. In 2020, boat sales exploded. Dealers moved units faster than they could stock them. According to NMMA data, new powerboat sales jumped 13% between 2019 and 2020, reaching nearly 320,000 units, a 13-year high the industry hadn't seen since before the Great Recession in 2008. Sales remained elevated through 2021 with approximately 300,000 units sold. People wanted out of their houses, they wanted open water, they wanted something they could control when everything else felt uncertain. First-time buyers made up about 34% of boat sales in 2021. These weren't seasoned boaters. They were families who'd never owned a boat, didn't know about winterization costs, and had no idea what a bottom job actually meant. Manufacturers couldn't keep up. Lead times stretched to 6 months, then 9, then over a year for popular models. Dealers started taking deposits on boats that didn't exist yet. And because demand was so intense, prices climbed. New boat prices saw an average increase of 10% in 2022, with projections of another 2 to 5% rise in 2023. A 24-foot center console that sold for $85,000 in 2019 was listed significantly higher by mid-2021. Buyers paid it. They financed at low rates, sometimes 0% for qualified buyers, and they didn't question the markup because inventory was scarce and the fear of missing out was real. But here's what nobody planned for. That surge was temporary. By late 2022, interest rates started climbing. The Fed raised rates aggressively to combat inflation, and boat loans, which are almost always tied to variable rate structures or short-term fixed products, got expensive fast. A loan that was 3.5% in 2021 jumped to 7% or higher by 2023. Monthly payments increased by hundreds of dollars. For buyers who stretched to afford their boat in the first place, that rate hike was a breaking point. The psychology of that moment matters. When rates were low and boats were scarce, buyers felt urgency. They worried that if they didn't buy now, they'd miss out entirely or pay even more later. Dealers capitalized on that fear. They pushed extended warranties, premium packages, and add-ons that inflated the final sale price. A boat with an MSRP of $95,000 might have closed at $118,000 after all the extras. Buyers didn't push back because everyone else was buying too. It felt like the right move. Then reality set in. Gas prices spiked in 2022. A day on the water that used to cost $150 in fuel suddenly cost $250 or more. Families who bought boats for weekend recreation realized they were using them less than expected. The initial excitement wore off. Maintenance issues appeared, and when those higher loan payments kicked in, the boat started feeling less like a dream and more like a burden. Walk into a dealership today and you'll see something you haven't seen in years: inventory, more of it. Dealers are sitting on boats that are taking longer to move. According to industry reports, boats are spending 53 days longer on the market in 2024 compared to the previous year. Some of these are new units ordered during the boom that arrived too late. Others are trade-ins from owners who can't afford the payments anymore. And a growing number reportedly include repossessions, boats that lenders took back after buyers defaulted. Floorplan loans are a significant concern right now. Dealers don't own the boats on their lots outright. They finance that inventory through floorplan lenders, and those lenders charge interest. The longer a boat sits unsold, the more it costs the dealer. In 2020 and 2021, boats turned over in 30 to 60 days. Now, dealers report significantly longer inventory ages. That's months of interest payments on a depreciating asset. Some dealers reportedly pay substantial monthly amounts per boat just to keep it on the lot. To move inventory, dealers are discounting. While new boat prices on average dropped 3.4% to $174,000 in the first half of 2024, individual dealer discounts can be more substantial depending on how long a boat has been sitting. Some dealers have offered promotional sales to clear inventory. In certain regions, particularly Florida dealerships, aggressive pricing strategies have been reported. They need the cash flow and they need to clear space for incoming trade-ins. Regional differences matter here. Coastal markets in Florida, California, and the Carolinas are seeing more pronounced inventory changes because these markets saw higher boom-era activity. Dealers in Florida are particularly exposed. The state reportedly led the U.S. with $5.4 billion in marine sales in 2021, and when that market adjusts, it affects the broader industry. Miami, Fort Lauderdale, and Tampa Bay dealers are advertising deals that would have been uncommon 2 years ago. Some are bundling trailers, electronics packages, and even prepaid storage to sweeten deals. Inland markets in the Midwest are experiencing their own adjustments. Dealers in Michigan or Minnesota didn't see the same boom-era pricing spikes, so their market corrections appear more moderate, but they're still feeling pressure. Buyers are cautious. They're waiting for better deals, and dealers know it. The problem is that waiting costs money. Every month a boat sits on the lot is another month of floor plan interest, another month of depreciation, and another month closer to the next model year when that boat becomes officially outdated. Some dealers are getting creative. They're offering lease-to-own programs, fractional ownership arrangements, and even rental programs where buyers can offset costs by putting their boat into a charter fleet. These aren't standard products, and they come with complications. But dealers are trying various approaches to generate revenue and manage aging inventory. If you bought a boat in 2021 or 2022, your boat's value has likely declined from what you paid. Not literally underwater, hopefully, but financially. The boat you paid $120,000 for might be worth less today. That's a significant loss in 2 to 3 years. For most people, that's not a write-off they can absorb easily, especially if they still owe a substantial amount on the loan. This is where things get complicated. Boats depreciate, everyone knows that. But the rate of depreciation during a market adjustment can be more severe. A boat loses value the moment you take delivery, but it can lose even more when the market has more inventory available at competitive prices. If you're trying to sell, you're competing against dealers who are pricing new boats competitively and against other private sellers who want to move their boats. It's a competitive market, and most owners find selling challenging. Insurance costs have also climbed in many regions. Hurricanes in Florida, storms along the Gulf Coast, and rising claims have reportedly pushed some marine insurers to raise premiums. Some owners report increases of 30% to 50% on their annual policies. For a boat that costs about $800 a year to insure, that's an extra $500 to $900 annually. Add in slip fees, which have risen in many marinas due to demand for limited space, and you're looking at holding costs that make ownership more expensive than it was 3 years ago. Slip fees are particularly significant in major boating markets. In South Florida, monthly slip fees for a 30-foot boat can run $800 to $2,200. In California, especially in San Diego or the Bay Area, those fees can exceed $500. And these fees keep climbing in popular locations because marina space is limited and demand from larger yachts can push smaller boats into less desirable locations. Some marinas have waiting lists that stretch years. Others have raised their minimum boat length requirements, effectively pushing out smaller boats entirely. Then there's maintenance. Boats that sat unused during the pandemic or were neglected by first-time owners are showing up at service centers with various issues. Engine problems, electrical failures, gel coat damage, these aren't cheap fixes. A repower on a twin-engine boat can run $40,000 or more. Bottom paint and through hull work might add another $5,000. Owners who deferred maintenance are now facing bills they can't afford, and some are choosing to walk away rather than invest more money into a depreciating asset. First-time owners are learning hard lessons about marine maintenance. A boat isn't like a car. You can't just park it for 6 months and expect it to start up fine. Ethanol in fuel causes problems. Salt water corrodes everything. Even freshwater boats need attention. Winterization isn't optional in northern climates. Skip it once and you might crack your engine block. That's a costly mistake. Storage is another consideration. If you don't have a slip, you need somewhere to keep the boat. Dry storage facilities charge $200 to $500 per month depending on location and boat size. Outdoor storage is cheaper, but exposes your boat to the elements. Some owners try to store boats at home, but HOA rules and local ordinances often prohibit it. You end up paying for storage whether you want to or not. Repossessions have reportedly increased, though lenders don't publish exact numbers. Marine finance professionals report a noticeable uptick in defaults. Borrowers who financed at high loan-to-value ratios, sometimes 110% or more when they rolled in taxes, fees, and extended warranties, are finding themselves in difficult positions. They owe more than the boat is worth, and they can't afford the payments. When a lender repossesses a boat, it typically goes to auction. These auctions are where price discovery happens. Dealers buy repos at steep discounts, often substantially below retail, and then try to resell them. That additional discounted inventory puts pressure on prices. A private seller trying to get $80,000 for their boat is competing against dealers selling similar boats at lower prices. It's a challenging market for private sellers. The repossession process itself is complicated. Unlike cars, boats don't have standard VN lookups that make them easy to track. A boat can be moved to another marina, hauled to a storage yard, or even taken to another state. Lenders hire recovery agents who specialize in marine assets, and these agents sometimes spend weeks tracking down a single boat. Once they find it, they have to coordinate with the marina or storage facility to take possession, which involves lien releases and legal paperwork. It's expensive and time-consuming, which is why lenders often accept short sales or negotiate settlements rather than going through the full repo process. Refinancing isn't an easy option either. Lenders are cautious. They're tightening credit standards, requiring higher down payments, and scrutinizing debt-to-income ratios more carefully. According to a recent survey from the National Marine Lenders Association, about 40% of participating lenders made criteria for loan approvals more stringent. If you bought at the peak and you're underwater, most lenders won't refinance unless you bring cash to the table to cover the gap. That's not realistic for most borrowers, so they're stuck with high-rate loans on depreciating assets. Some owners are trying to surrender their boats voluntarily rather than waiting for repossession. They contact the lender, explain the situation, and ask for a voluntary surrender arrangement. This damages credit, but not as severely as a full repossession and deficiency judgment. The problem is that even after surrendering the boat, the owner might still owe money if the boat sells for less than the loan balance. That's called a deficiency, and lenders can pursue borrowers for it. A boat that was financed for $100,000 might sell at auction for $60,000, leaving a $40,000 deficiency that the borrower is legally obligated to pay. Not every segment is experiencing the same market pressures. Certain types of boats are holding value better than others, and understanding why matters if you're thinking about buying or selling. Center consoles, especially in the 25 to 35-foot range, continue to see steady demand. These are fishing platforms, and serious anglers didn't stop fishing when interest rates went up. Brands like Grady White, Regulator, and Yellowfin are seeing more modest price adjustments because their buyers are often cash purchasers or have strong credit profiles. These boats also have lower holding costs because they're trailerable, which means no slip fees and easier storage. The fishing market operates differently than the recreational market. Anglers use their boats regularly. They're not weekend warriors who take the boat out twice a summer. They're on the water frequently, sometimes multiple times per week. And they maintain their equipment carefully because it's essential to their hobby or livelihood. Charter captains, tournament fishermen, and serious recreational anglers all need reliable boats, and they're willing to pay for quality even in an adjusting market. Pontoon boats are another segment showing resilience. They're affordable, family-friendly, and versatile. A good used pontoon in the 22 to 24-foot range reportedly moves relatively quickly at competitive prices. Dealers report that entry-level boats continue to attract buyers. The market for affordable boats hasn't collapsed because there's consistent demand from new buyers who want something simple and budget-friendly. Pontoons are also easier to maintain than most boats. They don't have complicated hull designs. The engines are accessible. Upholstery and decking can be replaced relatively affordably. And because they're stable platforms, they work well for families with kids, for fishing, for swimming, and for just relaxing on the water. They're not glamorous, but they're practical, and in this market, practical appeals to buyers. On the other side, large cruisers and sportfish yachts are experiencing more significant challenges. These boats are expensive to maintain. Slip fees for a 50-foot yacht can run $2,000 to $5,000 per month depending on location. Fuel, insurance, and maintenance add tens of thousands annually. Buyers who can afford these boats are sophisticated. They understand the costs, and they're not rushing into purchases right now. Inventory in this segment has been adjusting, and prices reflect the market conditions. The luxury segment is particularly sensitive to economic conditions. When buyers feel uncertain about the economy, they delay major purchases. A $500,000 yacht isn't an impulse buy. It requires planning, financing arrangements, and confidence in future income. Right now, that confidence is more measured. Stock market volatility, concerns about economic conditions, and various uncertainties all contribute to caution in the luxury market. Older boats, anything from the 1990s or early 2000s, are seeing mixed results. Well-maintained classics with strong reputations hold value because they're more affordable to buy and repair. A 1998 Boston Whaler in good condition with updated electronics might attract buyers at $30,000 because it's a known quantity. Buyers trust the brand, they know the boat will last, and the price is reasonable. But neglected boats with outdated electronics and tired engines are worth significantly less. Dealers won't take them as trade-ins in many cases, and private buyers aren't interested unless the price is very low. A 2002 cabin cruiser with worn upholstery, a non-functioning head, and engines that need attention might be listed for $15,000 and still struggle to sell. The cost to bring it up to acceptable condition can exceed its market value, so it sits. One interesting development in this market adjustment is growth in the rental and charter sector. Companies that offer boat rentals and charter services are acquiring inventory and putting those boats to work. This creates a new dynamic for private owners who are managing costs. Some owners are placing their boats into charter programs to offset expenses. You keep ownership of the boat, but a charter company manages bookings, maintenance, and operations. You get a percentage of the revenue, and the boat generates income instead of just costing you money. The downside is wear and tear. Charter boats get used frequently. Renters don't treat them like their own property, and mechanical issues can arise more often. The charter model works best for larger boats, 30 feet and up, because rental rates are high enough to justify the management fees and insurance costs. A 35-foot center console might rent for $800 to $200 per day in popular markets like the Florida Keys or the Bahamas. If the boat gets booked 60 days a year, that generates substantial gross revenue. After the charter company takes their cut and you pay for maintenance and insurance, you might net a meaningful amount. That's not pure profit, but it offsets your ownership costs significantly. Rental companies are also buying boats at competitive prices and building fleets. They see opportunity in the current market. They can acquire quality inventory, put it into service, and generate revenue. As long as they maintain the boats properly and keep them booked, the business model can work. This demand from the rental sector is helping to support prices at certain levels because it creates a floor. Boats below certain price points get acquired by rental operators. Where you're located makes a significant difference in how market conditions are affecting you. Florida, as mentioned, is seeing notable adjustments because it represents such a large portion of the national market. But within Florida, there are differences. The Panhandle market has different dynamics than South Florida. The Gulf Coast around Tampa and Sarasota is somewhere in between. California is dealing with its own factors. The state has strict environmental regulations that affect older boats. Newer boats with cleaner engines and better emissions controls are preferred, which affects older inventory values. California buyers also tend to be more affluent, so the luxury segment is larger there, and luxury is experiencing more significant adjustments right now. The Carolinas are interesting because they have a mix of recreational and commercial fishing markets. Charter fishing is strong in places like the Outer Banks and Charleston, so center consoles and sportfish boats maintain steadier demand there than in purely recreational markets. But cruisers and pontoons are seeing normal market adjustments. The Great Lakes region, Michigan, Ohio, Wisconsin, has a shorter boating season, which always affects the market. Boats there are used intensively for 3 to 4 months and then put into storage. This market didn't see the same price spikes during the boom, and it's not seeing the same adjustments now. Changes are more modest, and the market remains fairly stable. Texas is another unique market. Boat ownership is strong there, and the Gulf Coast provides excellent boating access. But hurricanes are a constant concern, and insurance costs reflect that risk. Some Texas buyers are shifting towards smaller, more affordable boats that they can trailer and store inland when storms approach. The market for large cruisers is slower, but smaller fishing boats and bay boats are moving reasonably well. If you're thinking about buying your first boat, this market offers opportunities you haven't had in several years. But you need to be informed about it. Don't assume that just because market conditions have shifted, every boat is priced appropriately. You still need to inspect carefully, get a marine survey, and understand what you're buying. A marine survey costs $400 to $800 depending on boat size, and it's worth the investment. The surveyor will check the hull, the engines, the electrical systems, and all the safety equipment. They'll tell you what needs immediate attention and what might become a problem down the road. If the seller won't allow a survey, that's concerning. Walk away. Financing for first-time buyers is more stringent now than it was 3 years ago. Lenders want to see stable income, good credit, and a reasonable down payment, typically 15% to 20%. If you're financing through a dealer, compare their rates with credit unions and banks. Credit unions often offer better terms, especially for members with good credit histories. Think carefully about the total cost of ownership. The purchase price is just the beginning. Factor in insurance, slip fees or storage, fuel, maintenance, and winterization if you're in a cold climate. A general rule of thumb is that annual operating costs will run about 10% of the boat's value. So if you're buying a $60,000 boat, expect to spend $6,000 per year keeping it running and stored properly. Some years will be less, some will be more, but that's a reasonable average. Start smaller than you think you need. Your first boat should be something you can afford to make mistakes with. You're going to hit the dock. You're going to run aground in shallow water. You're going to forget to put the drain plug in. These things happen to everyone, and they're less problematic with a smaller, less expensive boat. Get comfortable with boat handling, learn the systems, figure out what you actually use and what you don't, and then move up to something bigger if it makes sense. So where do we go from here? The next several months matter. Spring is traditionally the busiest season for boat sales. Buyers start thinking about summer, dealers push inventory, and the market becomes more active after winter. But this spring has different dynamics. Inventory patterns have shifted, financing is expensive, and buyer confidence is measured. If you're looking to buy, market conditions may favor buyers more than they have in recent years. Prices on new boats dropped 3.4% on average in the first half of 2024, and boats are taking longer to sell. Dealers want to move inventory, but you need to be strategic. Focus on boats that have been sitting for a while. Check the listing dates. A boat that's been on the market for several months gives you negotiating leverage. Don't be afraid to make reasonable offers. The worst they can say is no, and in this market, they might negotiate. Financing remains a consideration. Rates are still elevated, but some lenders are offering promotional arrangements to stimulate sales. Look for credit unions. They often have better rates than traditional marine lenders, and if you can pay cash, you'll have even more negotiating power. Dealers will often discount for cash buyers because it eliminates financing delays and risk. If you're thinking about selling, you need to be realistic. Your boat isn't worth what you paid for it. It's worth what the market will pay today, and that number is lower than you want it to be. Price it competitively from the start. Overpriced boats sit, and the longer they sit, the harder they are to sell. Clean it up, take good photos, and be ready to negotiate. If you're underwater on your loan, consider whether holding on for another year or more makes sense. Prices might stabilize, but they're unlikely to return to 2021 levels in the near term. For owners who plan to hold long-term, current market conditions are less relevant to daily enjoyment. If you bought a boat you can afford, you're using it regularly, and you're enjoying it, then the market value doesn't affect your experience much. Boats aren't investments in the traditional sense, they're lifestyle assets. The value is in the experiences, not the resale price. But if you're financially stretched or you're not using the boat, now might be the time to evaluate your options before conditions potentially change further. Dealers are entering spring with measured expectations. They hope that warmer weather and traditional seasonal demand will help move inventory. But they're also preparing for the possibility of continued challenges. Some are adjusting staffing, refocusing on high-margin services like maintenance and repairs, and being more strategic about new inventory orders. The approach for dealers right now is careful cash flow management and patience. Manufacturers are watching closely too. Production schedules for 2025 models are being adjusted based on dealer orders, and those orders are down compared to previous years. Some manufacturers are offering incentives directly to dealers to encourage ordering. Others are adjusting production and waiting for the market to find its footing before ramping up again. Here's the question you need to answer. Are you buying, selling, or waiting? Because the market continues to adjust. Each month brings new data, shifting inventory levels, and evolving price dynamics. Dealer strategies will change, lenders will adjust their approaches, and regional markets will continue to show different patterns based on local conditions. The boats that hold value today might not be the same boats that hold value 6 months from now. If this breakdown helped you understand what's really happening, hit subscribe. We track the marine market closely. Dealer reports, financing trends, regional adjustments, and charter market developments. We'll keep you updated as conditions evolve because the coming months are important. Whether you're looking for the right time to buy or trying to figure out your best move as a seller, you need accurate information based on real data, not speculation. Make sure you're paying attention.